Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, July 23rd, 2013. Well, a continuation of the trend to the upside today in a candle that's made a higher high and a higher low, and the third consecutive period that we've had a white body candle. Quite a decent size to this white body, and this suggests that the buyers have made a decent amount of net bullish progress on the day between the open and the close, and that's in line with the previous day's trading. And that day's trading was an extension on the amount of upside momentum that the buyers found in net terms. This does give us some confidence in the continuation of the trend to the upside, and it does suggest that there is a possibility of the market trading into this highlighted zone of resistance. Now, we have seen the buyers close with control of the market today, and that's quite important too. So not only have they changed from having a day where they had a weak amount of control, they still had control for the previous day's trading, but they lost commitment when they traded above the 131.96 level. Today the buyers have managed to close up above that level and have maintained strong control of the market to close with strong control at the end of the trading day. And as I've mentioned, it does suggest that the market may have found some decent momentum to test within this zone of resistance, and this zone of resistance is a previous important area, even past what we've seen here in the recent past, where it was previously resistance and then support, and it does have the potential to offer itself as resistance and extends from 132.50 up to about 133.09, 133.10 roughly. Now, we also have the important 133.20 level just above there, but if this market can find some decent momentum, we might test up to the upper levels of this zone of resistance. That is a possibility. To the downside, we should see some strong support now coming in around the 131.96 level. It was previous resistance here and for the previous day's trading prior to today, and we know that that may act as an area of support. And also we have the cloud trading just below that level around 131.77, so very, very strong support down below where the market's trading at the moment. In terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the previous time the market's trending up, and here we've seen the market trading through the important 38.2, 50%, 61.8% level in bullish manners, and then today we've seen the market test through the 78.6% level with a bullish candle. This does suggest that there is a good possibility of the market testing at least to the 100% level at 132.49. So that's an important level that we should be watching if the market does trade up there, and if we see selling coming in, it could herald the potential for a change of trend. But at the moment the market has continued bullish trading up above the Fibonacci ratio, so the next target is up there around 132.50 roughly. And in terms of the Fibonacci retracement, we're in an expansive mode of that. We trade in a bullish manner through the 100% level. We now have bullish trading almost to the 161.8% level. Obviously, that's the effect of that is coming to play. We've seen some small price rejection, so it does suggest that there could be a change of trend. But with the buyer still strongly in control, there is a possibility of the market testing to that level once again, and that coincides almost with that 132.50 level that we've just mentioned. So a very strong confluence of resistance around this area. So we do need to watch that area quite closely for tomorrow's trading. Now, in terms of patterns in this market, and here we've seen some sort of a symmetrical triangle develop. It's not quite a perfect one. We had a decent trend leading into it. The size of the triangle relative to the trend leading into it is a little bit too large for what I like, but we did have this convergence of peaks and troughs within this large volatile congestion area, and we've had a breakout up above the upper boundary with a solid close up above there. So it is a potential trade to go long, and the good thing here is that all of this has occurred above the cloud, so it gives us quite a great deal of confidence in the market trading a fair way into the potential target. The target is the distance of the width, the maximum width of the symmetrical triangle projected up from the breakout. And that gives us a target up here around the 134.15 level, and that coincides with this important major swing high that we saw fairly recently, a couple of months ago in the market. So that is an important target. There is a good potential for the market to trade up to those levels if it can trade through some important resistance levels before we trade up to there. Now in terms of Ichimoku, obviously a bullish market in all three timeframes. The market is trading up above the cloud, and we've seen the market break out above the cloud and then test to within and just below the cloud and bounce off there, and now find solid support within the cloud again over the last few days, and now we're trading in a bullish manner back up above the cloud. And all of this does suggest that there is good potential for the market to remain above the cloud and continue trading to the upside in those long-term timeframes. The market is also trading up above the Kijun Sen and the Tenkan Sen, and the Kijun Sen is pointing flat, so by trading above there we have a bullish market in the medium-term time frame, but the flat Kijun Sen does cause some concern. The flat Kijun Sen tends to attract price action, so there is a possibility of the market being attracted back towards the flat Kijun Sen. So if that does occur, we do have strong support, as I've mentioned, around the 131.96 level, just around the top of the cloud, and within the cloud around 131.45. The Kijun Sen itself could act as solid support, but that's below the cloud. Not likely we would be trading down there in a hurry, but that's down around the 130.79 area, 130.85. The Tenkan Sen is also below the price action, so that's giving us a bullish market in that fast term time frame, and all three time frames are now bullish, with the market trading above all of those three indicators. But the Chikou span here, and this is important, is trading below the corresponding price action, so it's not confirming the bullishness that we're seeing in all three time frames, and does raise some doubt about the potential for the market to continue to the upside. So I suggest that this area around the yellow zone may be very important, and how the market reacts to those levels will probably be quite important. We know that that bottom of that yellow zone coincides roughly with the Fibonacci levels, with both of the Fibonacci techniques, so important resistance coming up for this market. We've also had a crossover of the Tenkan Sen above the Kijun Sen, and that is a buy signal if you're using the Ichimoku indicators as the standalone system. That did occur pretty much just below the cloud, might as well call it within the cloud, so it's a not so strong buy signal. It's not a weak signal, so there is potential for the market to trade higher. We would prefer to see that signal occurring above the cloud for the strongest signal, but I tend to suggest that the breakouts above the Ichimoku indicators, such as the breakout above the cloud or above the Kijun Sen, are the more important signals to take from Ichimoku, and we've already had the breakout above these indicators, and we are now seeing follow through. So the thing to watch for here, obviously, with this bullish market, is a test up to these higher levels, to 132.50 or beyond. Watch how the market reacts. If we see selling coming in, we have strong support down around 131.96, extending down to 131.45, but the zone of resistance extends all the way up to about the 133.09 level, and then up to 133.20.